Hello everyone! In the previous video, I promised to take a look at the Ethereum chart. That's exactly what we're going to do today. We'll also touch a bit on Bitcoin and take a look at the Kingfisher service, which I use and can recommend to you. Now, let's get straight to the chart. Let's imagine that you're in the ocean and you see a huge tanker, maybe it's carrying oil, lumber, or something else. Accordingly, if it's a very large ship, you can roughly estimate its origin and destination by its trajectory, because ships generally don't make loops. They choose a route and stick to it. So this big ship and its direction of movement, that's the trend. Those are the big candles. Monthly, weekly, daily. But if you walk around inside the ship and take a look, here the food supplies have gone bad, so tomorrow the crew will have nothing to eat. Over there, the fuel is running low, which means the route will need to be changed and the ship will have to stop at the nearest port to refuel. And here, some components and their mechanisms are working very poorly and could break down. So, we need to go into dry dock for repairs. And all these little nuances are the small time frames that we examine to determine whether they might change the situation on the higher time frame. In this way, the higher time frame sets the global trend, while the lower time frame tells us whether this trend might change. So that's why we'll start with the higher time frames. I'm removing all my markings and let's look at the monthly candles. I turned on the weekly ones, but we need the monthly ones. So what do we see on the monthly candles? On Ethereum's monthly candles, we see an interesting picture. Here we had a wave of decline. 1 month, 2, 3, 4, 5. 5 months of uninterrupted decline. In May, we engulfed 2 months of decline at once, specifically March and April. And not only did we engulf them with a green candle, but we also closed above the 50-month moving average. This suggests further growth and supports the renewal of the high that was set in May. Note that in June, the May high was surpassed, but the June candle showed a very large upper shadow, a very large lower shadow, and closed with almost no body. This is a candle of uncertainty. It indicates that the market is in a flat zone, in a sideways trend. At the same time, pay attention to another important point. The June candle closed above the 50-month moving average, and this still favors continued growth, meaning the market did not fall below an important level. And now in July, the market is trading, Ethereum is trading above the 50-month moving average, but nevertheless, it remains in a sideways trend. Our priority is upward. Upward to where? To the base of this huge red February candle. That's $3,300. If we break through 3,300 to the upside, the next target is already 3,700. If we break through 3,700, the next target is these highs. The highs in the area of $4,000, let's say $100. But for now we can talk about the level of $3,300 as the base target. And this is said on the monthly candles as long as we haven't closed below the 50-month moving average. In that case, uncertainty would arise. Why? Because to talk about a full-fledged reversal downward, we need to engulf this green candle. Until that moment, it could be anything. For now, we had a bullish engulfing, so the priority is upward toward $3,300 on the monthly candles. Weekly candles. Here the situation is more complicated. Notice that on the weekly candles, we've been trading for 8 weeks between the 50 and the 100-week moving averages from above. And literally every week we touch these moving averages with the candle wicks. And just the same, let me make this bigger so it's easier to see. And just the same, from below, the 200-week moving average supports us and limits the drop, and we also almost break through it every week with the wick, but end up closing above it. And this current week is no exception. Moreover, note that right now we are roughly in the middle between the 200-week moving average below and the 50 and 100-week moving averages above. This means that, strictly speaking, making trading decisions within this range is not the right approach. If we see a weekly candle close above all the moving averages, that would signal potential growth. Where to? We've already determined that it's $3,300. But from the perspective of weekly candles, that's this level, but we've already reached it before, so the next level to consider is $3,230, and the right nearby is $3,300. Accordingly, if we close below the 200-week moving average, what is our target level? Well, this point right here, where we had some kind of local reversal, is $2,222. Again, give or take. Let's switch to daily candles. Let's see what we have here. On the daily candles, we're also in a sideways range. We couldn't break through the 200-day moving average, or rather, we couldn't, because in the last 2 days, not counting today, we've closed above it and signaled a breakout, thereby setting a target for growth. What is that target? Well, most likely it's this zone around $2,800. We had it here, and we had it over here as well. This was a reversal zone. If we turn on my markup, we'll see that there was consolidation in this area, right? And we tested this area. Now we're testing the bottom of this area from below, the one marked by the rectangle. And if we break through the $2,602 level, then the next target will be 2,800, 2,820, and after that 3,300. Even based on the channel markup, which is drawn using the extremums marked with circles, we can assume that if the growth continues now, it will come somewhere here. Again, into the zone where the big drop started. This is the level of $3,332. We can quite reasonably expect this. But what should we pay attention to on the daily candles? We need to pay attention to how today's daily candle will close. If it closes below all the moving averages, then with a very high probability we will see Ethereum move to the area of $2,342 and potentially to the lower boundary of the channel. And right there we have the 100-day moving average, which is already around $2,250. It's possible that the week might even go down to around 2,100. If we see that today's daily candle ultimately closes above the 5-day moving average, then that will be a small indication that this was a retest from above of the moving averages we broke through from below, tested from above, and then we continue upward toward the 2,800 area. But the most reliable formation or structure will occur when we break through the level of $2,602 on the daily candles. Not before that. And if today we close below all the moving averages, then that's a bad situation for buying, and I definitely wouldn't buy anything. Although the $3,300 level remains a magnet. And now let's look at the shortest time frame, the 4-hour chart. What do we see on the 4-hour chart? We see that we broke above all the moving averages, stayed above them for a long time, and now we're seeing a retest from above. If we break through the 200 period orange moving average, then we have every chance to go down to 2,476 at the 50 period and to 2,445 at the 100 period moving average. But if we see that the candle's wick remains below while the body closes above the 200 period moving average, that will be the first signal to open long positions with a stop below the low of that candle, provided it doesn't break through the 200 period moving average. If we see this red candle being engulfed by a green candle, that will be a strong signal to buy, but always with a stop loss, and under no circumstances should you increase your position size excessively. Right now, what matters most is whether this candle closes below or above the 200 period moving average. For growth, of course, it is undesirable to break below the 200 period moving average, because then this movement could continue at least down to the $2,445 level. That's the situation right now. At this moment, there's no need to do anything. We are watching for any reversal pattern, specifically when we engulf the red candle above the 200 period moving average on the 4-hour chart. For now, we are seeing a short-term bias towards a decline to around $2,445 for Ethereum. Now, let's switch over to the Kingfisher service. I've got it open in a separate window here. I most often use the liquidation maps here, so let's take a look at them and we'll start with Bitcoin. There are various parameters here: high, optical, opti-U. High means that we're looking at the liquidation map for positions that were opened with very high leverage. So, let's take a look at Bitcoin and see what we get in the end. We can see that the main cluster of liquidations for trades with very high leverage is concentrated in the range from $109,000 up to about $110,000. If the current price were not in this area, but somewhere over here, I would say that with a very high probability, Bitcoin would move toward the $110,000 area. But given that there is a very large gap here, it is more likely that either the price will continue to decline or it will stall in a sideways movement. Why? Because the market will need to accumulate liquidity, similar structures will need to form either above or below the market. And then the market maker will understand in which direction it is easier to push the price. For now, this particular area is quite significantly far from the current prevailing price, so we absolutely cannot say with complete certainty that this specific zone definitively acts as a powerful magnet for the price of Bitcoin at this moment in time. Now let's take a look at another type of liquidation map. It's called optical opti. These are leverages of about x20, x25, not the largest, but these are the ones that again act as magnets in the relatively short term. Notice that today's price movement has already swept through this area and right now there's no one left to liquidate here. In other words, this zone is empty, there is currently no one here. Accordingly, it would be more logical to see Bitcoin move toward the $107,000 area. Basically, to pick up these remaining pieces that haven't been collected yet, that's all I can say. And finally, the liquidation map, which includes positions with all leverages, all leverage. So let's take a look at it. They update every 15 minutes, so there might be a slight delay. And here we can see that there are still a few, yes, unliquidated positions lower in the market. Again, likely around the $107,000 area. And that's it. After that, we can move beyond this zone to an area that's probably somewhere around $110,000. We can expand this liquidation map, move it over here and take a closer look at it. Look, this area here is $110,000 and this cluster is roughly $106,800 to $107,000. So, it's likely that Bitcoin could move to capture and collect this liquidity. Besides all that, I occasionally use this liquidation distribution. It works well in a calm market because there are two parameters here. These are all leverage and optical opti. All leverage shows that there are currently a lot of buyers in the market, so it makes sense for the market to move down. But if we look at positions with high leverage using optical opti, we can see that almost all the longs have been wiped out and only high leverage shorts remain in the market. And this already suggests that in the short term, we are most likely to see a rebound in Bitcoin. Oh, not just in Bitcoin, but in the market as a whole. Because here we have a long list of altcoins. If you can see this on your screens. Here we have Trump, ADA, Rune, Link, Algorand, Sand, and so on. Well, including Bitcoin and Ethereum. So right now, our short-term priority is upward, yes. But at the same time, we remember that around 107,000, there are still some juicy spots that the market maker might go after, but overall, it's unlikely that Bitcoin will go much lower than 107. That's it. And there's another tool I often use, which is the Hex chart. It analyzes the flow of options for Bitcoin and Ethereum. Here we switch to Ethereum, and it shows that if the price reaches the red zone, the dealers who sell options will support the price movement in this case. By selling, if the red zone were above, then we would say that as the price rises, the dealers would support the price movement by buying. If we saw a green zone here, then we would say, or rather, it would indicate to us that as the price moves up, the dealers would not participate in this movement, but on the contrary, would be selling. In other words, they would be smoothing out this impulse. Accordingly, the red zone is an area of potentially strong, sharp movement into this region, especially if the boundary of the red area is near the current market price. Right now, it is below the market, so for now we cannot talk about any powerful, sharp impulse. But if this dividing line were in this area and the red zone started abruptly here, then one could expect a sharp move downward. Accordingly, if we see a green area here below, let's say the current price, then this indicates that if the price moves there, it will be a smooth, gradual movement and not very strong. At the very least, it won't be very sharp. You can find links to the Kingfisher service in the description below the video, just like the links to the QuantFury platform, where we analyze charts together and where I trade without any commissions or fees. And our next video will probably be dedicated to Bitcoin or some stock market indices. By the way, note that today the stock market indices are going down, and this is putting pressure on the cryptocurrency market. So today we've seen a drop of about 0.5%, well actually not even 0.5%. I see that the Nasdaq index has dropped by 0.6%, the S&P 500 has fallen, and the Dow Jones index has dropped by 0.5%, which has led to Bitcoin falling by 1.5%, 3 times as much. So we should also pay attention to the stock market. Maybe I'll record the next video about one of the indices. Well, it makes sense to do it on the S&P 500. Subscribe, goodbye.